the market always bounces back. Dow Jones, Nasdaq, and S&P 500 are the three most followed market indexes. And being knowledgeable about our investment tips the odds in our favor. We can then counter our research and analysis. Common sense, good analysis, and basic logic can be great to invest in the stock market. You must remember that each stock has business behind it. Who don't have a lot of money lying around can also invest in the stock market. It doesn't have to be risky investments just to get good returns. When market crashes, it puts great company stocks on sale.
Hi, I'm Justin. Let's begin a good day. Today we're going to be talking about myths of stock market. See you later.
Yes, thank you, Justin. Let's talk about the myths of stock market. This will help us understand why even after knowing about it, why so many people don't invest in stock market. Well, before that, what are myths? Myths are simply wrong assumptions about something. Today, let's talk about the myths of stock market and burst them. That means destroy them. Let's first look at this graph of Nasdaq and try to understand something about it. So, we see that this graph shows the performance of Nasdaq over 45 years. Now, in this Nasdaq graph, if you see carefully, there's always ups and downs in the stock market, just like a heart monitor. But this Nasdaq graph shows us the pulse of the stock market. It's not a straight line. Instead, there are so many ups and downs depending on the changing demand and supply. Even if the market goes down, there is a point it will stop going down and turn upwards. The market always bounces back. This positive turn can happen because there is something good happening in the world, or there's some good news floating in the market, which people take as a positive sign or hope. This creates a reversal point and the uptrend to start. Then, slowly we can see the market bounces back. Now let's look at this from around November 2016 to February 2018. For almost more than a year, the stock market kept on going up. This is an amazing run. Do you know what happened in November 2016? Yes, Donald Trump won the election and became president of US. This is a booming stock market and was also a result of strong economic growth, blockbuster corporate profits, and hopes that President Trump would roll back regulations. To add to that, Trump also boosted markets by giving big corporate tax cuts. This created a positive wave and Nasdaq went up. In the same way, when President Joe Biden won the presidential elections in November 2020, we see a positive trend going around for a year. Now, elections don't actually have a direct connection to corporate America, but they do have a big impact on it. And that is the reason why corporate America is so interested in what's going on in politics and government. Now, we have to understand that which political party wins is not the point, but moreover, a stable government has a positive impact on business and stock market. For example, a stable and good government can roll out good policies, laws, and budgets without much opposition, which is good for corporate America. So, if a stable government comes in power, then it is good for business and the stock market goes up. But again, if you're investing in stock for a very short time, it's difficult to predict whether the stocks will go up or down. This can get very risky as no one can predict the exact movement of stocks. Instead, long-term stock investment is much better. Also, one more thing. Some of you must have heard your friends saying that they bought stocks which many said were good, and the stock market went down and they lost all their hard-earned money. And that's why they feel it's very risky and don't invest in stocks anymore. Well, it's surprising for me when people put in their hard-earned money in stocks without doing their own research. And they just go and buy the stocks just because some friend or advisor said so. Why are we depending on others to do our research and analysis? Can't we do it ourselves? Just by taking the decision to buy stocks blindly on others' advice can be very risky. Surprisingly, people sometimes do more research on buying snacks than they do before buying stocks. Amazing, right? According to me, buying stocks just because someone said so or because they are trending in the news is kind of like gambling. This kind of decisions can be risky, as they completely depend on how good the advice was and nothing else. The decision to buy stock should be taken by doing our own research and analysis, and being knowledgeable about our investment tips the odds in our favor. Now, suppose we are planning to invest in a company's stocks. We should see that those stocks are available at a good price. We should also understand the business very well and see value in it. Then, this kind of investment is called buying with the margin of safety. It's almost like buying a $10 bill for $5. With this kind of investment, there's a good chance that you will end up in good profit. Now you must be thinking, how can I do this research and analysis? Do not worry. On this channel, we will explore step by step all the important concepts of stock market to understand and analyze stocks. If our foundation is strong by understanding these basic concepts, then this will empower us to make better decisions of investment. With this knowledge, we can all be better informed and be a successful investor. We can then count on our research and analysis instead of depending on others for advice and hoping for luck. If you make well thought and informed decisions, then that is not gambling, of course. If you like what we are talking about, please like, share, and subscribe and hit the bell icon. And we look forward to